Okay, hi, I'm Mr. Simons, and in this video, we are doing a live reaction to the RBA's policy announcement. You can see in the screen here, it's 2:27 on Tuesday, the 2nd of July. And what we're waiting to see is whether the cash rate, which is 1.25% now, whether that will be reduced to 1%. Now, I think it will be, other economists think it will be, but we're going to see in 3 minutes what the RBA actually does. So if we look at some of the commentary around it, that a number of people are thinking that the RBA will cut rates because unemployment is too high, that there is too much spare capacity in the labour market, in the sense that there's a lot of underemployment, underutilization out there, and that by cutting interest rates, the hope is that it can get the economy going a bit faster, create some new jobs, or give the people that are underemployed some extra hours and some extra work, and therefore increase the pace of economic growth in the Australian economy. At the moment, as of July 2019, Australian economy growth is pretty weak and inflation is well below where the RBA would like it to be in terms of the target band. What are we, 228? So you can see that the markets, there's 77% chance, according to financial markets, that the RBA will cut interest rates today, so that many economists are thinking that the RBA will continue with those rate cuts. And an interesting point that someone told me, if the RBA cuts today, it will be the first back-to-back rate cut. So they cut in June. If they cut again in July, it will be the first back-to-back rate cut since the global financial crisis. So since there was that kind of worldwide emergency in terms of the state of economic growth. So we're waiting to see whether the RBA acts on that situation, takes that extra rate cut, and goes ahead with this expansionary stance. So if we look at the cash rate here, we can see that the 5th of June, that was the last movement last month, where it was a cut of 0.25 to 1.25. Prior to that, the cut before that, we have to scroll all the way back, not till August 2016. So rates had been on hold for that whole period until they were taken down in June 2019. So we're still waiting on the cut, or potential cut. I think it will be a rate cut, but we're still waiting to see that. In terms of what Philip Lowe, the RBA governor, has said, that he's thinking that the stats, GDP, labour markets, they show that the Australian economy is not reducing its spare capacity. So let's have a look now. Cash rate, June, still not there yet. Let's try refreshing this. This must make great content. There we go. So the rate cut of 0.25, now the cash rate is only 1%. So 3rd of July, cut of 0.25, 1%. So let's have a look at the statement. I'll put a link in the description so you can check it out. So it says it's meeting today. Great. Let's have a look here. This easing of monetary policy will support employment growth, so reducing that unemployment and that excess capacity, and provide greater confidence that inflation will be consistent with the medium-term target. The outlook for the global economy remains reasonable. However, the uncertainty generated by the trade and technology disputes, so those trade wars, America and China, is affecting investment and means that the risks to the global economy are tilted to the downside, so that there are more risks in terms of the global economy and slowing global growth. What do we can say here? So over the year to the March quarter 2019, the Australian economy grew at a below trend 1.8%. In terms of trend, the RBA is really looking for 2.5% to 3% growth in Australia. That is the goal in terms of economic growth. Consumption has been subdued, so weak, weighed down by a protracted period of low income growth and declining housing prices. So what we're saying here is consumption, which makes up around 60% of Australia's GDP, has been subdued, has been weighed down, so restricted, by low income growth and declining house prices. Because house prices declining, that's going to reduce people's confidence and also stop them getting out there and spending, instead saving their money. Increased investment infrastructure is providing an offset in terms of growth. because investment is also part of that aggregate demand equation. And a pickup in the resources sector is expected, partly in response to the increase in the price of Australia's exports, right? Because that there is increased demand, that the bogs is well and truly in surplus. So that's providing a nice boost to the economy. The main domestic uncertainty continues to be the outlook for consumption. Although there is expected to be some support, employment growth is strong, unemployment. So further gradual lift in wages is still expected. So taking together the labour market, the Australian economy can sustain lower rates of unemployment and underemployment. So there's still further to go to improving the labour market. Inflation is still weak. Conditions in most housing markets are soft. So here we go. Today's decision to lower the cash rate will help make further inroads. So will help to make further progress. That's what we mean by inroads into the spare capacity in the economy. It will assist with faster progress in reducing unemployment and achieve more assured progress towards the inflation target. And it will keep an eye on things there. So the RBA really focused on reducing that spare capacity, that excess capacity in the labour market, and trying to accelerate the economy and inflation with this cut in interest rates. So now the question will turn to August. Will the RBA act again? Will it stay put and wait and see what the effect is? Either way, we'll be there to check it out. Okay, so thank you very much for watching. All the links in the description.